London-listed industrial components company Essentra provides a vast array of parts for manufacturers around the world. We're talking here about caps, bushes, handles, plugs, fasteners, you name it. Essentra probably does it. It specializes in the manufacture of things that we never really know where they come from, but without them, much of what we use around the house would just fall apart or not even work. That's how important Essentra is to our daily lives here at home. Paul Forman is Chief Executive, and he joins us. He's a shareholder in the company as well. Paul, good to talk to you. Thanks indeed for your time. I'm always fascinated to talk to companies that, as I say, few people know the name, but so many people depend on what it is you produce. Just expand more about what it is that Essentra does.
Sure. Well, we have three discrete divisions, Jeremy. The one that most specifically reflects that is what we call our components division. And if you have a lawnmower, if you have a computer, if you have a chair, if you have a table, there's a very high probability that we will make those small, almost invisible, but essential components, hence the thinking about the name. So that is a key focus for us. If you are somebody who uses medicine, you will be using our cartons, our labels, our literature. If you are one of the billion people in the world who are a smoker, there is a very high chance you'll also be using our products. So we do permeate all parts of existence in all parts of the world.
It's clearly been a difficult year. We know that. And indeed, Essentra isn't the only company to have suffered. Both revenue and profit are down. But you told investors at the print of the full year results back at the back end of last year, we have refreshed our purpose, values and goals to better reflect who we want to be and what Essentra is going to do. What have you changed, or how different is Essentra looking now than it did 12 months ago?
I don't think the actual shape of the business is different. What we're much clearer about is why we exist. We exist in the space we do to help our customers, whether they be pharma companies, cigarette companies, manufacturer of sit-on mowers, to be more successful as businesses, helping them solve problems, helping them to develop new products, etc. So we're very clear on that. We have put a huge emphasis also on doing all of that in a responsible way, whether that be how we treat our people, the way we treat the planet, the governance we have, etc. So I think that's a lot clearer. The other point I think I would make, Jeremy, is that by focusing right from the beginning of the pandemic on three legs of employee well-being, outstanding customer service, and cash management, I think we have created stronger bonds with our customers. Definitely, I believe we're gaining market share across the board. I think we've made an even stronger covenant with our employees, and we have really focused on managing cash flow and liquidity. And as a result of that, the fundamentals of our business, both our clarity of purpose, but those basics, are even stronger now. So in a perverse way, COVID has been a positive experience for the business. But we haven't just focused, Jeremy, on playing defense. We added a fourth leg of our thinking, which was building for the future. And as a result of that, we have now, in the last 9 months, completed 2 acquisitions, one in packaging in North America, and then most recently we announced one in our components division in China. So we've continued to build, whilst also make sure that those fundamentals are even stronger than they were in March.
Of course, this is one of the things, isn't it, about Essentra? You are a truly global business. Let's talk about COVID first of all, and what this has done. And as I explained the rough outline of the shape of the full year numbers, you had that drop in profit and revenues. But what has COVID done, apart from made you talk about this refocusing and making sure that the company remains top of its game?
I think with regard to our employees, we've had 2 main changes, one of which is we've really fundamentally rethought about how we can, where possible, embrace flexible working, and that's something that we'll continue. I think also vis-a-vis our employees, we've tried all sorts of new communication methods, And I think that has built an even stronger relationship. So, for instance, twice a week, I will have 90-minute Q&A sessions with one of our 70 factories, 70 warehouses. And I think it's a fundamental transformation of how leadership is happening in a more appropriate environment, if you like, for the new normal.
Yeah, what about Brexit as well? I mean, this has come at the same time. It's almost been a perfect storm, hasn't it? I mean, company that's based in the UK having to deal with that as well as COVID and as well as everything else that's going on around the world. How have you managed that particular headwind? Or indeed, has it not been a headwind?
In many ways, if I take division by division, because it's hard to generalize, Jeremy, if you take our filters business, we are not in the UK at all because there is no cigarette manufacture in the UK. So that division wasn't affected. In packaging, what you tend to find is the pharma market is clustered. So you have an Irish cluster, you have UK, you have Western Europe, you have Eastern Europe. And because we have manufacturing footprint in all parts, we've had to kind of balance capacity, but it hasn't at all compromised our ability. In components, where we mostly manufacture in the UK and have a very large state-of-the-art warehouse in Germany, that's put additional, like many other companies in Jan, Feb, March, put extra strains on that. So, for instance, to give you a concrete example, it would take in December 2 days to get from our Oxford facility to our German warehouse. That went up to 12. It's now back to about 7. And it's now stable, so we can plan on that. But there was quite a difficult transition. And certainly if you take our components division, the vast majority of issues which we are tackling at the moment are supply side as opposed to demand side. So demand is actually very strong indeed. So what we're trying to cope with is Brexit, is COVID, is raw material availability and pricing, is labour availability in the North America. Now we're doing it, and we're doing it well, but it is quite a different world even from November, December last year, I'd say.
And of course, as a company, you're making progress in other areas to bring about further long-term benefits to the business. One of these, of course, is the joint venture in China. Explain more about that. What has driven that particular deal, and what's it bring to Essentra?
It's a little or a zero known fact that although China has 20% of the world's population, roughly, it smokes 44% of its cigarettes. So it is a huge market. It basically doubles our accessible market. And actually, strategically, it's pivotal to the Chinese government because the revenues and duties they get from cigarettes, and it's a state-controlled monopoly, are the largest single source of revenue. 8% of all the Chinese government's money comes from there. So they're very keen to work with us, who are the world leader in what we call special cigarettes, which are higher price, to drive up the selling price and therefore the revenue take. So we have an opportunity in this state company blessed joint venture with a number of the major provincial manufacturers to essentially upgrade the Chinese market and to give us a leading position, developmental position, in what is the largest market in the world.
What's China like to deal with? I guess when you're being invited to do business with China, it's probably fairly straightforward, I'd imagine. But on the whole, hackles are raised sometimes when we talk about Chinese joint ventures and partnerships and so forth. And I know some companies find a lot of headwinds in China. How would you describe the business relationship that you have with the Chinese authorities?
Fundamentally strong. And why is that, Jeremy? It's because our goals and their goals are totally aligned. So their drive to increase the selling price and therefore the tax take is dependent upon having state-of-the-art filters. We are the best manufacturer of filters, complex filters in the world. So I first met the head of the state monopoly about 2.5 years ago, and it soon became clear to both sides that we were actually the ideal partner. So I'm under no illusions. They want our know-how. We want access to their business. So it's a very symbiotic arrangement, if you like.
If we can move on and take a little bit more of a look about your global operations, what's the competition like there at the moment? You're in different markets doing different things, and of course, nothing's ever going to be equivalent in terms of competition and pricing and so forth. But how are you finding the competitive edge at the moment? Are there a lot of manufacturers in an economy that provides perhaps maybe a better platform to produce goods? Do you find that competition is different in other areas than others, or is it an easy game at the moment?
I would never admit to it being an easy game, and it hasn't been in the 20 years I've been running PLCs. But I would say, particularly if you look at components and packaging, what is noteworthy is that we are either the number one or the number two in the world, and yet we only have 4% market share. So if you look at the market for producing cartons, say, for pharmaceutical, there's ourselves and one other company that have between them about 12%. And then the whole market is then characterized by national or maybe regional players of a single product category. And I think that our depth of pocket, our ability to invest, we're spending 50 million on upgrading all of our ERP systems, our ability in components to develop a state-of-the-art website really does give us an advantage over a lot of this fragmented competition. And frankly, we did gain during the lockdown, particularly in the components which serves industrial production, because some of our smaller competition simply couldn't continue. So net, we have benefited through our ability to invest. And secondly, I think that we have been able to provide service even in the tough times, and our customers definitely have appreciated that. I've noticed a step change in our relationship such that I think often we are a supplier, now we are genuinely seen as a partner in all three divisions.
Just describe very briefly how the year has gone so far. I know that you produce full year earnings at the end of the calendar year, and of course we're coming to the end of June, which means of course we're expecting interims at some time in the next couple of months or so, doubtless. How has 2021 been, this fiscal year been so far for Essentra?
I think it's been positive. We feel comfortable for the full year based on where we are at the half year versus broad expectations. Our components division has been having very, very strong underlying demand across all parts of the world. So that whether that be North America, Europe, or Asia, particularly China. So output is fine. As I mentioned before, the bigger challenge there is supply side rather than demand side. Our filters business, you mentioned China joint venture. Because of these stronger relationships, we're winning more outsourcing deals. And also we're helping our customers still who've got supply chain challenges themselves. The most challenge from a market point of view, although we're gaining market share, is packaging, where that part of our business that focuses on prescriptions, so products for prescriptions or surgeries, is obviously, given the state of the healthcare market, still quite soggy, I would say, but it's just a question of when it comes back, and we think towards the second half of this year. So, I mean, net, as I look forward, I said right at the top of the programme that I think we have both the opportunity to grow our top line in the short, the medium, and the long term. I think we have margin expansion. I know we have margin expansion potential, and components. We have other M&A opportunities, some of which will be driven and developed and fostered by the recent tough times. So I think we're well positioned now, and we will see progress at the half year.
Pricing, are you raw materials prices rising? I know that commodity markets have seen rises in prices across the commodity complex. I guess your input prices are rising. If they are, which let's assume they are, and you're nodding, are you finding it easy then to roll out price rises to the companies you're selling to?
I think if you look at, say, US warehouse and factory labour, if you look at polymers like polyethylene or polypropylene, it's very well known that this is a unique set of circumstances, and our customers understand that. So albeit, as always, with all businesses, we may have something of a lag, we're confident that in H2 we will be able to offset the price inflation that we've been seeing. And again, we talked, Jeremy, about our relative size and the fragmentation. If you are buying polyethylene and you're 10 times the size of a competitor, it definitely gives you an advantage in terms of availability. It's not just a question at the moment of price, it's actually whether you can get the things as well. The other point I'd make, particularly with components, and this links to our sustainability focus, is we're increasingly moving to blending virgin and post-consumer recycled, so environmentally responsible materials. And that again gives us another option, because you can't simply, if you're a small entity, just use PCR, post-consumer recycled. So that's another advantage of our scale.
Let me bring up a share price if we can, because I think this describes some of what you've been talking about. I mean, it's clearly a share price under pressure compared to where it was 3 or 4 years ago, when I think we were around about 990p, now 319. Explain what you are doing as a chief executive and your executive team on the board about the outlook, the future. You talk about how much market share you got, where you want to be, how you want to shape the company going forward. What do you say to investors who are looking at this at 319, having been at 990p? What's the message to shareholders?
The message is that in the first phase between 2017 and 1819, we were basically fixing this business. We then simplified the portfolio and we've built a platform for growth, whether that be market share gain, developing the capabilities to, if you like, be the best in our class, whether that be digital capability, 99% service levels, etc. We have undertaken a number of self-help initiatives, both in terms of, say, filters outsourcing or environmentally friendly products, and we've taken action on cost. So I think that there is personally a mismatch or an underappreciation of the potential value creation in those three levers of underlying market growth and market share gain, and organic and inorganic opportunities for growing, and margin expansion, not just through actions, but also the benefits of putting more volume through our factories. So I think there is an underappreciation of what a strong set of cards we have and how many self-developed growth and margin expansion opportunities there are.
One final question, look into the crystal ball. What are we going to be talking about at the end of this year? Where do you see the company? What sort of movements do you see in the balance sheet and profit and loss when you report the full year this year?
I think we will deliver really strong profit growth. I think we'll deliver good cash conversion. We will talk about some really positive structural developments, and we will talk about 2 very successful acquisitions, and who knows, there may be more in the next 6 months. Okay,
look, Paul, we'll look forward to speaking to you again, because it's an interesting story. As I said, a company that not many people have heard of, but many people will have come into contact with your products. Good luck, and we look forward to hearing more from you at a later date. Thanks indeed for joining us. That's Paul Forman. He's the Chief Executive of Essentra. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.